Hi everyone, welcome to today's video. So in today's video, I'm going to speak about 5 positive changes that are going to impact the stock market. So if you are an investor in the Indian economy, investing your money in the stock market, please listen to this video very carefully. For example, recently you might have heard the news that Indian bonds are going to be included in JP Morgan's GBI EM index, which is a bond index, and this will create or bring in roughly $25 billion to $40 billion of foreign wealth in India. So definitely a positive step will impact the stock market. I will explain. Similarly, a lot of other positive changes are happening. For example, the crude prices are somewhat mellowing down. On top of that, Indian rupee is likely to get stronger. So aisa hoga, nahi hoga, what are the aspects that you need to think? So I'm going to speak about 5 of these trends and how am I restructuring my portfolio accordingly. Now, if you watch the video completely, you make notes, you will be able to fundamentally restructure your portfolio. Now, I've spent a lot of time preparing for this video, so just a humble request that if you like these type of fundamentals driven video, please consider supporting them. Just press the like button. It would allow these type of videos reach out to more investors and will make them truly financially aware. So with that spirit in mind, let us kickstart. And the first macro change that is happening, which is positive, is the inclusion of Indian bonds in the GBI EM index. How will it impact the stock market? Let's quickly discuss. Now, basically, if we study the capital markets in India, it comprises of 2 main parts. One is called as the bond market and one is called as the stock market. Now, market ka matlab kya hota hai? Market means that, for example, what is the utility of vegetable market? Well, it is to buy and sell vegetables, right? So that is the utility of vegetable market. Similarly, in the bond market, what happens? Well, bonds get buy and sold. Similarly, in stock market, what is the utility? Stocks get bought and sold. So these are called as government bonds or corporate bonds. Similarly, ITC, Hindustan Unilever, they can go to the stock market and raise money. What do they do with all this? Well, they use that money to expand their business further. Similarly, the state government and the central government can also issue bonds and raise money for doing what? Well, to build bridges, highways, all this stuff, right? So I hope that you got the basic structure of what capital markets are and the 2 primary components of it. Now see, within this space, what happens is that the bond market in India, this part is not very mature. For example, in the US, the bond market is very mature. A lot more investments come through the bond market in the US compared to the stock market. It's almost like 10 times more in the bond market compared to the stock market in the US. In India, that is not the case. Our bond markets are still very immature as of now. And this step or this macro change of India bonds getting included in JP Morgan's GBI EM index is a game changer. Now, if we speak at an international level, there are 3 major bond index, right? So we are talking about this part, that there are 3 major bond index. One is the JP Morgan index, in which Indian bonds have been recently included. And another is Bloomberg, and the final one is FTSE. Now, dunya bhar ke investors, right? Investors world over, they invest in these bonds, in each of these 3 indices per se. Now, there are 2 ways of investing in the bond. One is called as passive style of investing and second is called as active style of investing. Now, this is very similar to the stock market, that if you go and invest your money in SIP format every single month in Nifty 50, what are you doing? You are doing passive investing. That aapko pick nahi karna hai individually that which individual stock to hunt for. You will simply go and invest in an index. So that is called as passive style of investing. Now, this is done by a lot of mutual funds. On the flip side, if you are actively looking for opportunities to buy, this month I'll buy like HUL, next month I'll buy like HDFC Bank because wo gir gaya hai, this that, then you are doing active investing. So this type of investing happens in this index also. So the recent change that has come in is the fact that Indian bonds are going to be included in this first type, JP Morgan wale mein, Indian bonds are going to be included. Now, the size of this index fund is right now at $250 billion, and Indian bonds going forward from June of 2024 are going to make up 10% of the entire base. So therefore, $25 billion of inflow of foreign wealth is going to happen in India's bond market. So I hope so far the story is clear. Additional good point here is that if you consider these 2 indices also, Bloomberg and FTSE, they are also likely to follow through. So they are going to follow in the footsteps of JP Morgan. So therefore, the total quantum of money that will flow from 24 June to 25 June will be in tune of $40 billion. So this is a very positive impact. Now you might get very tempted that, okay, I also want to go and invest in the bond market. Is it the right time to do it? Yes. Why? Because the interest rates are peaking. FDs are giving very good interest rate. Government securities are giving very good interest rate. So this is a definite good positive news. So in case you're looking to invest your money via bonds, I would highly encourage you to check a platform called as Incred Money. It is a wonderful platform for you to invest your money via bonds.
Also on that note, even the corporate bonds give very good returns. So do check it out.
They have a list of experts who curate bonds on their platform, and these bonds are handpicked by them. They look at factors that can make the bond less risky, because many a times what happens is that the bonds get extremely complicated to invest your money into. So from that particular perspective, it becomes very important for us to take the help of experts in terms of curating the bonds. So this has been done already on Incred's platform. So you can go and check it out. Now, just to give you an idea on how these bonds are curated, their experts look at the quality of promoters, their past track record, pedigree. They also look at who the equity investors and lender to that underlying entity is. And they also check the credit ratings that have been issued by different organizations like CRISIL, CARE, ICRA and India Ratings.
These are just a few things that their experts look at while curating the bond.
So definitely, in case you are interested in bond investing, do check out the platform.
Please check out Incred Money platform using my link in the description and also get 0.25% extra on your first investment.
So now you would say that, okay, अच्छा ये तो ठीक है, bond investing की बात हो गई, and maybe I'll build some portfolio there. But what about stock investing? Will this move impact the stock market also? And what type of impact will it have? So, well, yes, there will be an impact on the stock market, and it is likely to be a very positive impact. So there are 5 sub points that you need to understand from the stock market perspective. So point number 1 and positive impact 1 is that the cost of capital in terms of borrowing will come down. Now India or Indian companies right now have a very high cost of capital. For example, it would differ from firm to firm, but even if you look at conglomerate business, for example, Reliance Group, Jio, Adani, so they all have like a cost of capital despite being such a big conglomerate player between 8 to 12%. Now this is very high cost of capital. Now with more bond money coming into India, what is happening is that many of these firms might go to the bond market in order to raise capital. Now, if their cost of borrowing is coming down, which is called as the cost of capital, is that good for the company and the stock? The short answer is yes. It is a wonderful thing for the company simply because of the fact that they will be able to source financing at a lower cost, and that hits their operation profitability, everything else. Now, the primary beneficiary or the number one beneficiary of this change would be the NBFC companies. Why NBFCs? Because typically they have the highest cost of borrowing. So for them, this is a very positive change, very positive mood. On top of that, banking stocks are likely to do well. So I still remain very bullish on NBFCs, banks, and even manufacturing companies from that particular perspective. So I am holding my position. I have already revealed in the past that I have approximately 70% of my portfolio in finance right now, my Indian portfolio. So I'm going to maintain it. I feel very bullish about this entire space, especially banking and NBFCs, because not only their borrowing cost is likely to come down over the next 2 years, on top of that, they are sitting on massive profitability and the macroeconomic condition looks very good for their growth to accelerate. So this is point 1. Point 2 is, and this is an oversimplified point, I will explain it to you subsequently when we speak about the second factor. But because of this singular change, the rupee is set to appreciate or at least not weaken, which is a positive change. But this is a slightly dicey issue, so I'll explain it to you in slightly more detail subsequently. Point number 3 is that the borrowing cost for the government is also going to come down, because the index that we are speaking about, that will comprise a lot around GSEC or government securities, that again represents the borrowing cost for the government. Now, if the government is able to borrow at a lower cost, that is a definite plus, because they can spend a lot more money in terms of infrastructure building and restructure their previous debt. So all that good things will happen, right? So this is third change. Fourth is that this indicates the overall maturity of our capital market. Abhi tak bond market, as I had said earlier, it was not mature. Slowly, in fact, very fast, it is getting mature. So that's a very positive, healthy change for the entire Indian ecosystem. What this does is that it introduces a lot of new investors to India. Now, many a times what happens is that there are many foreign investors. They typically tend to invest in bonds. For example, they might pick Indonesia. They might start their investing in the bond market. then they feel कि अच्छा ठीक चल रहा है यहाँ पे, and they will track that market more, and subsequently they might switch to equities. On top of that, what you need to remember is that, see, if the bond market in India is mature, right, and there is equities, so depending on the macroeconomic factors, if these foreign investors feel कि यार इंडिया में in bonds we have already invested and the macroeconomics look really good, so let's shift our money from bond to equity. So this change becomes easy for them. Otherwise, typically what was happening is that majority of FII money was coming in equity, and anytime there was a panic in the economy, all this money used to go to the US. So at least this will slow down. I'm not saying that this will completely get eliminated, but this will slow down. Okay. And final point is that the current account deficit will come down due to this change. Now, current account deficit simply means export minus import. So this is a positive, healthy change. If the foreign institutional investor money is coming in, then the CAD is likely to reduce, and that again is a positive, healthy sign for the overall macroeconomy. Now, the second key change that is happening from a macroeconomics point of view is, and economists are divided on it, but some people are saying that, you know what, the US dollar is going to get strengthened, and some economists are saying that US dollar is going to get weakened. So just take a look at this particular chart so that you understand the story better. You will see that the INR has been consistently following at a very fast rate over the last 2.5 years. Now this has been an alarming cause of concern, and lot of discussions have been happening कि यार India की economy crumble तो नहीं कर जाएगी, bad things will happen in the Indian economy, this that. Now the chances are that this trend might actually reverse. So let me help you systematically understand on what all factors does this point depend on, whether the Indian rupee is going to gain strength or is it going to weaken from this point the way it has been happening for the last 2 years. So here are complete set of factors. You guys can pause the video, read every single point, and after you have read it for 1-2 minutes, you will realize, yeah, this is very confusing. इतने सारे factors हैं. How will you be able to make a decision whether INR is going to get strengthened or weakened? So let me simplify that thinking process for you. Now, whether the INR gets strengthened or it gets weakened, it depends on the supply and demand. For example, if the demand of Indian rupee is more, right, then this will shift right, and as a result, the INR will gain, right? It will not get weakened, it will gain. On the flip side, if the demand for INR is less, then INR will get weakened. So that is the simple equation. Now this equation does not depend on India, unfortunately, or in majority of the cases it does not depend on India. It rather depends on whatever is happening in the US. And there are 2-3 critical factors. Please notice the word I am saying critical factors. These are not all the factors. Saale padhne to again, here it is, go and read it and apply your brain. But I will tell you the most important ones. So you have to look at these 3 factors: interest rate, inflation and debt from a US point of view. Now, if the interest rate in the US are high and will remain high, then the demand for US dollar will be high. Now, why is that? Because बहुत simple सी बात है that if Indian FDs are giving you 7.5% and the US FDs are also giving you, let's say, 6.5-7%, then lot of foreign investors will think that okay, US economy bigger, more stable, so let's put our money there only. अगर safe investing ही करनी है तो. So it depends a lot. So the strength of INR depends on the interest rate that are there in the US. So recently, and very recently, here is the news, you can check it. The US Fed has categorically said that they are not going to cut the rate, or at least not cut the rate very aggressively till 2024. So this caused a little bit of panic also, and this indicated that US may the interest rate will remain high, and the US market had corrected recently a little bit. So this is point 1. Point 2 is the inflation, because these 2 points, interest rates and inflation, are interrelated. Now, if the inflation in the US economy is high to begin with, or abhi inflation is high, then the US government can't cut the interest rate too much. Why? Because it will create more worries for inflation. So this is what is happening in the US economy right now, that these 2 things are unlikely to change. That is what economists are saying. Third point is around debt, that if the debt looks manageable, then US dollar will continue to be strong. Now, if the debt looks damadole, then people sell off US dollar and move to some other currency. But having said this, this is all a mid-term point of view. Mid-term mein, this is what it looks like, that it's not as if that any major change is going to happen in terms of weakening of INR or strengthening of INR. That is unlikely to happen. But this entire situation, or the fluctuation of change, so that rate will not accelerate, which is good news for India. So now comes the third point, which is around the crude oil prices. Now you might have witnessed realized that 2021 was a major pain point for Indian stocks, one of the prime reasons was that the input cost means that आप Asian Paints, so if you're a manufacturing company, then the input cost, the raw material cost that you are buying to make your end product, that went up very high. Now, why was that the case? Because the crude prices were on a rise from the year 2020 to 2022 almost. Then, since then, the crude prices have come down and our Indian markets have gone up from roughly, let's say 15,500 all the way to 20,000. Okay. Now what is happening is, and it is forecasted that this is going to moderate. It is going to go moderately up and it is going to moderate. So इससे होगा क्या? That the manufacturing oriented firms are likely to have better operating profit margin. This is the first key change, especially if it is a company that is manufacturing for India, because export related problems abhi bhi रहेंगी. There is a lot of clash. For example, India-Canada clash is happening. So a lot of problems there. So export is likely to get hit. There are problems in the Europe. There are problems elsewhere. But manufacturing companies that are focused on Indian consumers, their OPM is going to go up. OPM means operating profit margin. This will happen because the input cost is likely to fall. So from that particular perspective, the manufacturing sector in India, which was a laggard last year in terms of the growth rate, it had very, very low growth rate. The growth rate there will accelerate. Finance is already doing well in India. Growth rate in manufacturing, if it picks up, then service sector, manufacturing, both will do well, and it creates very good ingredients around the election times to give like a very good breakout in the market. So then comes the fourth macro change, which has to do with the US interest rate. I briefly spoke about it, but let me systematically point that out as well, because the recent fall that you are witnessing in the stock market, one big trigger for that has been the US interest rate concerns. Now, just to help you understand the entire story, here is the US interest rate chart. You can see that it has risen very fast over the last 2-3 years. Sudden spike. Why? Because there was inflation problem in the US and their government increased the interest rate really, really fast. Now, as a result, the inflation is coming somewhat under control. That's part A. Part B, the government said that, you know what, initially the government said that we are going to cut the interest rate. Now they're saying that we will see. So they are like all over the place. It's not very clear what they are going to do. So isme what they are going to do is that in India we have something called as RBI Monetary Policy Committee meet, where all these decisions are taken. Similarly, in the US there is something called as FOMC, which happens every 2 to 3 months, and there some type of consensus is reached. Now an assessment was done, and this is an important figure, so I'm showing it to you, and this tries to predict what will happen with the US interest rate. So right now you can clearly see that these dots, this increase the consensus point. So this tells us that the interest rates in the US in the year 2023 will stay somewhere around 5.5%. Long term this is going to get cut, no doubt about that, and this is where the consensus is forming, that this becomes the new base. The expectation was, right, the expectation here was that, hey, here the interest rates will get cut very aggressively, but this is not happening, right? This is happening at a very slow pace, right? So this is what spooked the market, and people started trembling a little bit, especially short-term traders, and they sold the market off. Please understand that we are in a bull run, but pullbacks can happen in a bull run. Pullbacks means 5-6% correction. Even corrections happen. Almost 1.5-2 years, one correction will happen, which will be 10 to 15%. Be prepared for these type of things. If you're not prepared, then you will not be able to stay invested in the stock market. If you're a serious investor, I would again encourage you to check out my YouTube member community. I write a post every single day explaining you basics, fundamentals that will help you generate more confidence. Reviews have been excellent, so do go and check it out. The fees is extremely affordable. Try it for a month. If you don't see the benefits, then cut the membership and move on. But anyways, coming back to the topic, it looks like that the year 2024 and 2025 are going to be good years for the stock investing. Now some of you would say, Akshat, you said that in 2024, that after 2024 markets will correct. I said that markets are likely to peak there, right, somewhere around that time. This also depends on the US election. US elections are in November of 24, right? Uske baad elections results aayenge, this, that, and all that stuff. So please include 2025 into that mix also. And a lot of things can change. At what rate interest rates are being cut? What is the policy continuity? A lot of things happen, but it looks like that the government might save a little bit of steam going into 2024, 2025. Still very much bullish outlook. Please don't be shaken off by this panic that has been created as of now. Long-term trend still remains that the interest rates is likely to be cut. So from that perspective, we still have to remain bullish. Now comes the final point that, see, I have explained you 4 points that are working in India's favor, but 5th point unfortunately is not working in India's favor, and it has to do with the concept of policy continuity and policy clarity. Now, a classic case in point is the case study of Delta Corp, and you must have checked the news that they have been slapped with a lot of GST fines, somewhere totaling around 14,000-15,000 crores. Now, for context, let me tell you what is the market cap of Delta Corp. So the Delta Corp market cap is 4,697 crores. And their GST fine is like 16,000 crore over the last 5 years. Now, why is that happening? And is this like a systematic ploy to kill the entire gaming industry in India? Because crypto के साथ भी कुछ ऐसे ही हुआ, that crypto so much negativity, policy clarity is not there, बनाएंगे policy, ये होगा वो होगा. Lot of crypto entrepreneurs left the country altogether, and that thing has gotten tough. Now, I'm not trying to defend crypto and all that. I'm trying to tell you a big policy story. Now, similarly, gaming is a very big thing all across the globe. Just for context, if you put gaming on one side, if you put Hollywood, Bollywood, cricket, everything on other side, then the gaming industry is much bigger than all of these combined. So that is how big the gaming industry thing is. Now, some country is going to win on this front. Maybe US, maybe UK, some country is going to come up with slightly better laws on this front, and they are going to keep a large pie of that winning. Now, I'm not trying to defend the gaming industry. I'm simply trying to tell you that policy clarity is required. Now, why am I saying it? So if you go and read this particular article, you will see that 17,000 crore ka fine, 17,000 fine, GST, and the first notice has been sent for this. And what is the response of Delta Corp? So Delta Corp claims that this GST demand is based on gross bet value and not on gross gaming value. Now, this is a specific point which is not only applicable to Delta Corp but to the entire industry. अब इसका मतलब क्या होता है? So let me quickly explain it to you. What is the meaning here? Now, gross bet value means that you go to the casino and put a 1,000 rupee bet. Now, what the government is saying or GST department has said is that इस पे आप 28% GST दे दो or whatever the GST rate is. Okay. Now, this comes out to be a lot. Now, on the flip side, what is gross gaming value? So gross gaming value means that you ended up putting 1,000 rupees of bet. You won some bets, you lost some bets, and net you ended up winning 50 rupees. So the Delta Corp people are saying कि आपको GST इस पे लेना चाहिए. So this is where the issue is, and this is the difference between GBR and GGV. Now please read more about it. You will understand more. But I hope you at least got the basics. Now, to cut the long story short, how can it be that the market cap is only like 5,000 and the GST demand is like 16, 17, 18,000 crore? It's almost 3.5-4 times. Now, this is a very clear policy issue. I'm not saying that you should be selling it, buying it, not selling it. That is completely your call. That really depends on how you have designed your portfolio. I'm an investor in Delta Corp. I'm not selling whatever stocks I have. I do not have more than 0.5% of my entire equity money in Delta Corp. That is how I have designed my 50 multi-bagger stock pick. I have clearly said, please go and watch my last video. I will link it here. I've clearly said that out of 50 companies that anyone picks in that multi-bagger portfolio picks, 20 will go to zero. Now, if the issue is that if the case gets dragged on, problems after problems, then of course the stock is going to languish. On the flip side, if this is some kind of a ploy कि short term में beating दे देते हैं and then we will pick it up and buy things at cheap, that is also a very likely scenario. Now, GST experts can comment whether who is right, who is wrong. Courts can comment who is right, who is wrong. I'm not here to speculate, and honestly, speculating on this particular topic is very much pointless. The larger point I wanted to make was that if we can fix regulatory policies and give clarity on what the GST is, what regulations are in crypto space, bunch of other spaces, then businesses can come. Foreign investing that is coming into our market, that will be put from a patience point of view, where people will patiently wait and they will play the long-term game, which is beneficial for everyone involved. On that note, do check out this particular video where I've spoken about 5 multi-bagger bets. It will give you better clarity on what type of picks you could potentially make if FII money is coming in. Thank you so much for watching this video, and I'll see you soon.